Welcome to the Deep Dive. We're the show where we really try to unpack complex stories, get those crucial insights, and hopefully give you that aha moment. Today, we're diving headfirst into, well, a pretty high-stakes saga from the world of decentralized finance, DeFi, Imagine this, a project just brimming with ambitious plans, like a really clear roadmap for some explosive growth. Then, bam, suddenly blindsided by this unexpected, huge challenge that forces a complete rethink, a seismic reevaluation. It's a story about vision, but also disruption, and an incredible pivot. So our focus for this deep dive is the HIFI Protocol. It's a decentralized lending platform. We're going to trace its pretty extraordinary journey, specifically looking at early 2025 when they had this aggressive, future-focused growth plan, and then track how that shifted to what they're now calling an entirely new baseline plan. But our mission really is to understand how a project, especially in that fast, often volatile DeFi space, doesn't just survive, but strategically reinvents itself when, adversity strikes out of nowhere. What can we learn when the best laid plans just go sideways?
Let's jump in. Okay, so let's try and picture early 2025. HiFi Protocol was really buzzing, right? They had this grand vision for growth, a real sense of optimism about where they were headed. It must have felt incredibly exciting for them, mapping out such an expansive future.
Oh, absolutely. And what's fascinating here is just how ambitious that original roadmap was. They published it back in February 2025. This wasn't about small adjustments. They were planning fundamental changes. At the core, they were gearing up for the launch of HiFi V3. That's a major protocol upgrade. And alongside that, their own native stablecoin, the HiFi dollar, or HID. The whole idea was to, dramatically boost protocol revenue and make capital much more efficient. It was a big step, a really big step towards a more robust ecosystem.
Right, okay, so a significant technical overhaul was definitely on the cards. What else was cooking?
Well, second, and this is pretty cool, they'd found something that really clicked. Product market fit with real-world assets, RWAs. So this means they'd successfully figured out there was real demand for bringing tangible stuff, like think racehorses, vintage cars, even real estate, onto the blockchain to use as collateral. And they were all in on onboarding more of these, which was actually quite innovative back then. And then there was this thing called Crown Ribbon, a really unique initiative for, get this, tokenized racehorse ownership. They were even making a final push for SEC approval for it, which, signals a serious commitment to trying to work within regulated frameworks. That's pretty rare in DeFi.
Okay, so yeah, lots of forward momentum, big development goals, pushing into regulated areas even. How do they actually fund all this? To fuel that kind of ambition, you need resources, right?
Exactly. And that's where HiFi Improvement Proposal 15, or HIP 15, becomes absolutely critical. It passed unanimously on March 19th, 2025. Unanimously. That tells you something about the community support. So HIP 15 renewed the core team's contract for another 2 years, specifically from December 4, 2024 to December 4, 2026. And crucially, it allocated a huge sum, 25 million HiFi tokens for core operations, explicitly funding those vital V3 audits and all the development work. So this wasn't just a budget thing. It was a massive vote of confidence from the community, really setting the stage for a giant leap forward.
Okay, wow. So the table's set, resources locked in, communities cheering them on. Everything seems perfectly on track for this ambitious future. And then, boom, the unexpected challenge hits. It's hard. A sudden storm just throws everything off course. Walk us through that moment.
Indeed. Yeah, the storm, it arrived officially on March 28, 2025. That's when the Digital Asset Exchange Alliance, DAXA, over in South Korea, along with its big member exchanges like Upbit and Bithum, they took pretty decisive action. They basically paused all HiFi deposits and slapped an investment warning on the token.
An investment warning? Okay, that sounds pretty serious. What was HiFi's, immediate reaction to that?
Their response was incredibly fast. Get this. DAXA gave them 11 days to reply to their questions.
Okay.
HiFi sent back answers within just 12 hours.
12 hours, wow.
Yeah, it really shows the urgency they felt. They knew the clock was ticking, maybe. The questions themselves, according to HiFi anyway, were nothing out of the ordinary, just covering standard stuff, operations, governance, how they valued those RWAs, liquidation processes, and even how they used funds from a previous proposal, HIP 6. Pretty standard stuff, they claimed.
Okay, 12 hours is an incredibly quick turnaround. But it sounds like, despite being so transparent, HiFi started getting this feeling like the exchanges weren't really engaging in good faith. And this led them to do something, pretty extraordinary. Tell us about this offer they made.
Yeah, this is where it gets really interesting. You're right. HiFi wasn't just answering questions anymore. They felt the exchanges were being, let's say, unreasonable. So on April 3rd, 2025, they sent DAXA this unprecedented offer, basically trying to put all the cards on the table, resolve any legitimate concerns, and get that investment warning lifted immediately. They proposed to open all their books, all their records, for review by DAXA or any auditor DAXA wanted to choose. Complete transparency.
Okay, opening the books is huge. What else? What were the conditions? What did they ask for? And what else did they offer to, prove their commitment?
So they asked for HIFI deposits to be turned back on right away. Makes sense. But beyond that, they pledged to not sell any of their own HIFI tokens, and even offered to move all their HIFI into a 2-of-2 escrow multisig.
A multisig.
Yeah, meaning it needs 2 keys to unlock anything. And they offered DAXA one of those keys, essentially giving them control.
Wow.
That's practically unheard of, dealing with a regulator or exchange group like that. They also basically swore, 0 fraud, 0 bad debt, and said they could prove it. They even attached confidential documents showing the valuation for their 2 biggest collateral positions, which made up like 86.7% of all deposited collateral value, a huge chunk. And they put a line in the sand. They said they'd publish the email publicly if DAXA denied them reasonable accommodation, trying to show how serious they were.
So an offer of just complete, undeniable transparency, practically daring DAXA to find anything wrong.
Right.
How did DAXA react to such a bold move?
Yeah, you'd think that would maybe resolve things, right? But what's fascinating, probably deeply frustrating for HIFI, is that DAXA didn't accept the offer. They chose not to take them up on this very public, very transparent proposal. Instead, they just asked more questions.
More questions.
And then on April 11th, 2025, just 8 days after HIFI laid everything bare up it, and BitFun went ahead and delisted HIFI. Koinon, another DAXA member, did extend its review period to April 18th, which was maybe a small glimmer of hope. But the damage was done. The impact was immediate and devastating for the community. HIFI's published reactions said it all, really. They were at a complete loss. They said the impact was immediate and devastating for their customers, their community, left them with more questions than answers.
Yeah, this whole situation really highlights a significant power dynamic, doesn't it, between decentralized projects and these centralized gatekeepers like the exchanges. Even when the project is bending over backwards to be transparent, it feels like a critical vulnerability in the DeFi space. So, okay, what did this actually mean for HIFI's grand plans? The delisting just changed everything. All that ambition, V3, crown ribbon, it all just hit a brick wall, presumably.
It absolutely did. And that leads us to their resetting expectations announcement. It was a blog post on April 16th, 2025. And it was stark, incredibly honest, actually. HIFI stated very clearly they do not see a viable path forward for that previous roadmap. Why? Because of a severe lack of resources directly resulting from those delistings. This wasn't just, dialing things back a bit. It was a forced strategic reevaluation, a hard reset.
Okay, a hard reset.
Yeah.
What were the immediate, the tangible consequences of that assessment? What got cut?
They were profound and immediate. Specifically, the HIFI V3 audit, all the deliverables planned, nope, not moving forward. The push for final SEC approval for Crown Ribbon, also shelved, not moving forward. All ongoing development work, all marketing efforts ceased, completely stopped. And maybe the most telling thing, remember those 25 million HIFI tokens, the ones just allocated under HIP 15 for all that growth?
Yeah.
They were returned. Given back to the DAO, the decentralized autonomous organization, basically the community treasury. HIFI was really clear about it. They said, look, you need 2 things for success: a dedicated team and enough liquidity. And they honestly admitted they just couldn't deliver both anymore under these circumstances. Now, they did commit to overseeing their existing obligations, like current loans, and exploring refinancing options for longer ones. But the future they had planned, that was undeniably off the table.
Wow. So for a community that had just voted overwhelmingly for this really aggressive growth plan, how do you think that news landed? Was it just disappointment or maybe, I don't know, a pragmatic acceptance of the new reality?
I think it was likely a real mix, There had to be massive disappointment, a sense of loss for that future they'd all bought into. But the transparency of the HIFI team just coming out and saying, we do not see a viable path forward, that probably fostered a kind of pragmatic acceptance within the community too, eventually. It wasn't about giving up, maybe, but about acknowledging this fundamental shift in their circumstances. And that leads directly to their next move, facing this new, pretty stark reality, HIFI responded with what they termed a baseline plan. It was all about pragmatism, designed to ensure continuity, keep the lights on amidst all this uncertainty, rather than just, shutting everything down.
It's a remarkable shift, isn't it? From dreaming really big to just preserving the absolute essentials. So how did they formalize this new baseline plan? How did they set out this new stripped-back future?
That's exactly what HIFI Improvement Proposal 16, or HIP 16, was all about. It was proposed on April 21st, 2025, and then it passed and was executed pretty quickly by May 1st, 2025. Its core purpose, basically reduce distractions, hang on to the resources they still had, and set out really clear steps for the protocol if nothing else changed. It was about creating a safety net, not pulling the plug, which in itself is kind of a masterclass in strategic resilience, I think.
Okay, let's dive into HIP 16 then. What were the key parts? What defined this new, leaner reality for HIFI?
Okay, first up, resource allocation. They earmarked 800,000 USDC. That's a major stablecoin from their existing protocol liquidity. This was specifically to cover essential services through March 27, 2026. And essential meant like core DAO administration, accounting, website hosting, keeping the web app running, the blog, the forum, and crucially, the liquidation bots needed for the lending protocol. But, and this is key, the proposal explicitly said no new marketing or product development, full stop. This agreement also formally replaced and nullified HIP 15, the big growth one, and it inevitably meant reducing the size of the core team, too.
Right, so a really drastic streamlining, just focusing purely on keeping the essential functions running.
Yeah.
What about the core lending market itself and liquidity, especially after those exchange delistings?
Good question. Second point, lending market and liquidity. They deployed a new lending market specifically set to expire on March 27, 2026. This was designed to cover the duration of most of the loans that were still outstanding and to tackle that liquidity issue, which becomes critical when you lose major centralized exchanges. They allocated 200,000 USDC and $200,000 worth of HIFI tokens to create a HIFI USDC market on Uniswap.
Ah, Uniswap, a decentralized exchange.
Exactly. This was about shoring up their ability to function in a truly decentralized way without relying on those centralized players.
Makes sense. And what about those RWA experiments, the NFTs, the sheetheads you mentioned? Were they still part of this baseline plan?
No, this marked a clear shift there too. Third point, collateral and IP updates. The sheethead NFT collection, removed as supported collateral, and their pooled NFT service, which helped manage NFT collateral, was basically put into sunset mode withdrawal only. So that really marked the end of their NFT collateral experiment. But in a pretty cool community-focused move, the proposal approved letting a longtime community member at Mainbrain take over the sheetheads and pawnbots IP, like a community-led breakoff.
Interesting. Shows the community stepping up.
Yeah, exactly. And finally, HIP 16 also included really clear wind-down provisions, just in case. It detailed the steps if things really didn't work out, burning all the HIFI tokens the DAO owned, liquidating any remaining protocol assets into Ethereum's native crypto, and then distributing whatever was left over proportionally to HIFI token holders.
So planning for the worst, even while trying to survive.
Precisely. It's not just grim planning, it's responsible governance, right? Giving the community a clear, transparent exit strategy if that worst-case scenario ever happened. But it's important to stress, despite all the scaling back, the core operations did continue. ETH and the existing RWAs were still supported as collateral, interest still accrued. And HIFI actually stated they believed these efforts, including getting HIP 16 passed, were key in keeping HIFI listed on the other exchanges that didn't delist them, like Coinone and Binance.
Wow. HIFI's journey in 2025. It really is a compelling story, isn't it? Ambition meeting just unforeseen, brutal adversity head on. From charting this really aggressive growth course, new tech, new assets backed by huge community support, they were forced into this strategic retreat by these sudden, really impactful delistings. What started as this vision of expansion just rapidly pivoted to one of, resilience and essential maintenance. It's quite a testament to how quickly things can change in DeFi and how crucial that adaptability really is.
Exactly. And it leaves us with a pretty important question, I think, something for you, the listener, to consider. In this incredibly volatile world of decentralized finance, just how crucial is that combination of community governance and adaptable planning, especially when you're facing unexpected regulatory curveballs or market shifts? What are the broader lessons here, maybe for any organization, really, operating in a landscape that changes so fast, particularly when these external pressures can just fundamentally wreck a really well-thought-out roadmap? It really makes you think, doesn't it, about that delicate balance between ambition and sheer resilience, and how critical that ability to pivot truly is when things go wrong.